Hello, everyone. We're live with a new show about to be in a new year with new frontiers, right? So, welcome to the show. Uh, Today's live is going to be about this year a real estate operating environment and what it means uh, heading into 2026 for property management operators, owners, and real estate investors. I will be breaking down in the first part of the show. I will be breaking down through three lenses: the microeconomy and interest rates, rental housing fundamentals, and then operational shift happening right now with AI. We will talk rent growth and vacancy trends, demand drives, construction and capital cost, and how all of that impacts NOI budget, staffing turns, resident experience, and vendor performance. We're gonna use as a start. We're gonna use this report that was put together by the National Apartment Association. Okay, so start just at the beginning. First of all, welcome everyone. I'm glad you're here today. Thank you for joining me. Uh, Leave us a comment. Let us know what you're watching from today, and I hope to have you joining and engaging with the comments, with the content out here, with the report that I'm bringing. So this report was created by NIA in collaboration with Appfolio. They explore current trends in multifamily performance, ongoing management challenges, and key operational factors. Uh, the, re- the, res- the research was centered on a survey of industry professionals across the country, administered from July 16 through August 4 of this year. It received almost 2,000 complete responses, 1984 to be precise. Uh, Respondents were to the survey were represent a wide range of companies, from independent rental owners with fewer than 49 units to large-scale operators managing more than 30,000 units. In terms of operational roles, more respondents are focused on property management. So right here you see a breakdown on how many total units um, their company is managing, is owning or managing. So 50% of them are smaller operators, 499 units or less. 16% are between 500 and 999 units. 21% are 1,000 to 49.99 units, and 12% only are 5,000 units or more. I think I would call those institutional operators. Now we go to the roles. Who are the people that participated in the survey? Property managers were 38% of the respondents, assistant property managers 9%, uh, office or operation managers 7%, regional property managers 7%, owners 6%, accountants 6%, corporate executives 5%, leasing professionals 5%, leasing manager 3%, maintenance managers 2%. Very small number of respondents, percentage of respondents were 2%. So if they survey 1,000 multifamily professionals, 2%, it's only 20 people that do maintenance on a daily basis, maintenance professionals. Very little, very, very little. Actually, it's not shocking. I've learned that based on NA statistics, only about 2% of the participants at apartment lights every year are in maintenance. So that number kind of matches what I've learned a while back from the NA statistics about apartment lives. The highlights of the report: it identifies the challenges faced by industry professionals, including operational efficiencies, revenue maximization, and technology adoption. It also explores the varying impacts of these challenges based on the size of operators' portfolios, offering tailored solutions to enhance productivity and performance. What's really driving property management performance? That's the title of the survey here. So let's see what are the top challenges. Operational efficiencies. I think that's not a surprise out there at all. Focused on reducing business cost and optimizing process. So reducing cost is definitely a focus now more than ever, since revenue is not going up like it used to go 3 4 years ago. Rents are not increases, they're very stagnant in so many markets, especially markets where builders have overbuilt. um, you will see significant rent drops. I have heard first-hand knowledge from an area that I've invested in, Fort Myers area. Right there, rents have dropped significantly. Uh, there's a lot of new construction that's being built. So, if you want to keep apartments rented, the rentals full, then rents gotta go down. And my personal rentals took a significant hit out there. So let's see the first question. What are your company top three most important challenges today? Select three options. So they were allowed to select three options when they responded. Operational efficiencies, it's 75%. So 3 out of 4 people selected that. Maximizing revenue and profit, 66%. Um, Surprisingly to me, a third is implementing new technology and innovation. Historically, I think our industry has not been known as an industry that embraces technology. I think more and more professionals and executives now realize that there's no way around it. Right? Without technology, we're not able to accomplish much. So that's a nice surprise, a surprising third place. Then HR, staffing and recruitment. So we've been suffering for years from a pipeline that's not large enough to accommodate our needs. We also been losing professionals. We've been losing employees to other industries. So that doesn't surprise me at 38%. And also, we have increasingly higher turnover rates at the site level on maintenance and leasing both. But I could speak for maintenance. Some of the very large operators are facing 80-90% of turnover rates and more at times. Incredible turnover rates. The stakeholder experience, whether that's residents or owners or investors or even employees, and their satisfaction. 32% pick that as a priority. Risk compliance regulatory, 30%. You will see later down the road, down the slide, how incredibly affected various areas of multifamily are by compliance and regulations, and that's very concerning, honestly. When we get to it, I'm going to spend a few minutes out there to highlight a few numbers. And then investment and development decisions, it's at 20%. 1 out of 5. Okay. They're saying the challenges reported by apartment operators this year mirror long-term trends while highlighting the shifting role of technology. This year's top challenge, operation efficiencies, have been cited in a top 3 list every year going back to 2021, ranked either as number 1 or 2 in a list. Uh, that's kind of like expected to me. Similarly, the focus on revenue and profits has also been a top challenge for apartment professionals for the past 6 years. That's also expected. Apartment management is a business, so focus will have to be on revenue and profits out there. Okay, they're mentioning right here this year marked the first time when implementing new technology innovation rose into the top 3 list of challenges. Exactly what I was saying earlier. The, the move likely points to the critical role that technology platforms and solutions play in today's property management operations, as well as the rising number of tools that are being offered on the market. Technology challenges replaced another long running category that highlighted managers' difficulties with human resources, staffing, and trading. So, technology now, for most, it's a bigger priority than people. HR were like short staff, being short staff. That's a very interesting dynamic out there. I'm curious to hear from y'all what you think. If you have some thoughts on this number, on this preference, just drop them in the comments. Now, top challenges by property size. Right here, we're gonna see some very interesting differences. On a smaller operators up to 499 units, 500 units or less, the most pressing issues center on operational efficiency, 77%, and maximizing revenue, 69%. Uh, a similar trend for the other operator types. Technology adoption is a growing priority, 38% for many in this group. It appears to indicate that it is less about enterprise level innovation, more about finding cost effective tools that can streamline day to day operation without straining limited budgets. Staffing challenges, while notable, 30% do not dominate the picture as much as they do for larger operators, likely because these companies often operate with lean teams and tighter control. Yeah, they certainly do. And then if you are looking at a owner operator that has, let's say, 500 units, but they're not all located in the same location, like one property, one 500 unit property, and you have 20 units here, 30 units there, 18 units there, and so on and so forth. Chances are you're gonna have to run a centralized model, because you're not going to be able to deploy full-time employees on every site. Emerging operators, 500 to 999 units. Pressure points begin to shift. Staffing and recruitment take a more prominent role, 44%, signaling the difficulties of scaling operations beyond the small, tight-knit team. I do want to mention out here there's another trend too. I'm hearing about many operators, owners, operators, they're basically just closing down shop, the management shop, and they're starting to third party manage their deals. And I think this is one of the reasons. It's incredibly hard to find and retain qualified personnel. Um, we don't have a large enough pipeline to feed uh, the vacancy beast, and also a reality that maybe not so many owners are willing to admit is that most companies need scale in order to run a management operation profitable. In other words, most smaller companies that also manage in-house are actually losing money during the time that they're holding the assets. So their focus is uh, during the disposition, right? Growing the value of the assets, selling, making money that way, and offsetting the losses. But during the hold, as owners, they're typically losing money. A lot of them are. What are your company top three most important challenges today? Select three options. Again, this is the same graph, but it shows how people, based on the sites that the assets that they're working on, they have voted, right? So you have here 49 to 499, 500 to 999, 1,000 to 5,000, and over 5,000 units. You could see how the percentages vary. Uh, they're not incredibly, I guess, different right here. When we're looking at operational efficiencies, everybody's in the 70s. Revenue and profits from 59 to 69. So it's like a 10% spread based on size of the company. Now HR and staffing goes from like 30% to 50%, 49% based on the size of the asset. That's a lot. Um, Technology right here, it's very, very tight. You're looking at 35 to 43, so it's like a 8% spread between various company sizes. So there's not a whole lot of difference. Stakeholder experience from 29 to like 34%. So that's only a 5% spread. Okay, staffing concerns remain high for mid-size operators. So middle market, 1,000 to 5,000 units, 44%. Consider that a concern, staffing. But technology adoption grows further, 40%, appearing to indicate a turning point where digital infrastructure becomes central to managing complexity at scale. Revenue 65% and operational efficiency 72% continue to dominate, while the challenge is more about maintaining efficiency as portfolios diversify across markets. These companies face heightened compliance and regulatory risks, 32%, underscoring the operational weight of growth. When it comes to larger operators, 5,000 units and up, the narrative shifts again. Staffing challenges peak at 49%, becoming the single most consistent pain point across this group. This aligns with broader labor market pressures in property management, where talent shortages are high and high turnover rates make retention strategies critical at scale. Yeah, so there's a lot to be said here about the talent shortage. I'm just gonna I'm just gonna refer right now to just main side of the business because that's where I have like access to numbers easier than like the office side. Uh, there's a lot of new product that's coming online. There's hundreds of thousands of units that are coming online in uh, 2026 and 2027 will be coming. On top of that, we already experiencing short staff situations across the board. On top of that, we have even more of a situation with government and trades competing uh, against us uh, and against property management. How do they compete? So, government alone, military, it's planning on hiring within the next few years over 400,000 maintenance professionals and trades professionals. That's an incredible number. And also, there's an increased demand on trades for qualified professionals, and that's absolutely expected. The performance ecosystem, work productivity, and time allocation. There's some very interesting stats here. The results paint a familiar picture in property operationals. More Most professionals spend far more time reacting and maintaining than planning and building. So if you've been in property management for a while, or maybe for a long time, uh, I think it's very common knowledge that we were by excellence a reactive business. So a lot of the work that we do, it's reacting to what's happening to us, to the asset, so on and so forth. Most professionals spend far more time reacting and maintaining than planning and building. On average, they devote 42% of their week to routine operational work like paperwork, data entry, and admin tasks, and another 24% to reactive tasks, such as troubleshooting, tackling service disruptions, or responding to urgent requests. So I want to stop here a little bit, and I have some thoughts. The first one is 42% of their week uh, is dedicated to routine operational work like paperwork, data entry, and admin tasks. I am exposed to technology and I'm aware of technology being created as we speak that could reduce that type of work to a very minimum. I guess, for a lack of better word, I will call that busy work, paperwork, data entry, and admin tasks. There's a lot of technology out there that exists that minimizes that almost to the point of like completely eliminating it. What that's gonna lead to, I think, a couple of things. People will be able to do more with less. So on one hand, we're gonna see people running things more efficiently if they're being helped by the right technology. And secondly, uh, we're going to be seeing a reduction of personnel. For sure, we're going to, see. Well, I think we're already seeing. Um, I have friends. They're on a job market. They have difficult time finding jobs. Some of them have decades of experience in property management. Some of them are operation folks. Some of them are marketing, learning and development. They have hard time securing a job. So I think that that trend is just gonna continue. I unfortunately I think is gonna accelerate uh, with the advent of technology and with more implementation of new technology. Yes, G, I wanted to salute you. I just see your comment right there. 2/3 of the week or 25 hours a week. A four-person site team, it's 100 hours a week. Okay, let's do a little math here. Okay, because you're absolutely right. So let's just let's just do a little math. We have 100 hours, right? Times, let's just say that the average salary out there is like $20. So it's $2,000 a month worth of payroll that's being spent with busy work. Now, how would a operator play that? Of course, with the employee burden and everything, I think we're going to like probably like 25 to 2700, right? It's about 35-40%. So the way owner or an operator will look at is that obviously that's a cost. Will they be eliminating all this cost by introducing technology? Technology comes with a cost too. I see right here like a combination. I think probably like initially will be a 50-50 split to where I'll say maybe, excuse me, on a 4-person team, maybe half of like a part-time position, a full-time position will be replaced with a part-time initially, and then without increasing cost, some of the cost that used to be spent on payroll will be reallocated towards technology. I'm curious about your thoughts, G. I know that you're very bullish on seeing more VPs and more seniors being hired next year. I'm really curious, and I would like to just kind of like bring that into the conversation because it's from a human standpoint, is it needed? I think it is, but when it comes down to like strictly business decisions and everything, I think it's gonna be a tough sell. I think owners are going to go the other way around, and they will consider what's the most efficient technology that I could bring in, and instead increasing my headcount, I will be decreasing it slowly. So definitely, so much busy work, right? That's gonna be the main target right here. So if I'm an owner and I'm looking at 42% of the time of my site teams being spent on busy work, the first thing that comes to mind is like, how can I replace that? How can I eliminate that, if not like reduce it to a minimum? And the first thought that comes to mind after that is like, yeah, technology. Technology is available. Some of it is mature enough. He could pick up could pick up the slack. He could initially free up the teams, and then uh, later down the road, he could help me maybe reduce some positions, like eliminate some positions. Okay, this is another graph here. In a typical week, what percentage of your time do you currently spend on the following categories? Let's see. 42% do routine operational work. I'm actually curious here. What's part of this routine operational work? It's probably the busy work. It's included the paperwork, the reactive work. No, it's not. Reactive is the next category. So the reactive driven tasks are 24%. So that's a separate category. So if we were to add the bottom two together, it'll be like 66%. Yeah, 66 right there, 2/3. Just like you were saying earlier. So that's a huge chunk right there. So imagine introducing a couple of things, right? Imagine introducing technology to get rid of the busy work, and imagine introducing technology to better manage, I'll say, the maintenance side of the business. Let's just say the reactive, because I think the reactive tasks, a lot of them are maintenance related, right? uh, Imagine introducing a preventive maintenance program that's actually like being executed, not just another set of checking the boxes, right? And reports that your service manager has to turn in and check so many boxes every so often, every month, every quarter, and so on and so forth. Chris, huge cost. Do you think adding tech can often solve an immediate gap in labor, but also to increase the NOI for the property? That's an excellent question, Chris. So I will say, can solve an immediate gap in labor? Yes, partially. Not totally, but partially. I can totally see technology. So let's just think about maintenance training, right? I want to stay into the maintenance area because that's where I have the most knowledge on, and I'm more like in tune with what's going on the maintenance side of things. So It's maybe a thing that's not very well known is that at a national level, there's only 10 maintenance educators that do education at the national level in multifamily. So this is a crazy number. If we're thinking about, we have about 23 million apartments in the United States. At a 1 per 100 units means that we have 230,000 employees when we're ideally fully staffed. We're not, right? We have a staff shortage. But in ideal situation, we'll have about 230,000 maintenance employees workforce, and then having 10 uh, trainers to train those 230,000 employees means that we have a nation level trainer for 23,000 employees. There's nowhere near moving the needle or making any type of difference. Nowhere near. It's it's a very painful situation, I have to say. Now, how can we solve that? Well, a easy response will be hire more trainers, right? But on the other hand, is that this is a very well-known situation at the industry level, right? We haven't done it so far. Is there a chance that the previously 10 trainers will turn into 500 trainers all of the sudden, or like along 6 month, a year, 3 year period? I'll say chances are no, it's not going to happen. So then I think technology is going to come into place, right? How do you do inspections, for example, remote inspections? In other words, maybe have a a turnkey vendor that works with a technology solution to do an inspection when they first get to the property, to like film everything and send a video and have like AI reading that particular video and understand what the deficiencies are. Um, that's one way, especially for operators that aren't institutional, that don't have the luxury of owning like 200 or 300 units in one place. They might have 200 or 300 units in the market, but they're like 15 units here, 20 units there, 60 unit in the other place. So there's a lot of driving involved here, right? So when you add windshield time to the existing workload, that makes things even more difficult. And I think technology could be a very good way to leverage kind of like that type of situation, right? So that's one way uh, to increase the NOI for the property. Well, that's a difficult situation, right? That's a difficult question to respond, Chris, because when we're thinking about net operating income, if we're bringing technology, until technology proves that actually cuts down cost, it is a cost, right? So I know that most sales pitches are like, if you're gonna use our technology, you could save, I don't know, 50 man hour a week or whatever the number might be. But up until that thing is proven, for an owner and an operator, that's just only going to translate into cost, right? For them, it's just a cost. It's just like an extra expense that's being added to their budget. So it makes it very, very difficult at the beginning. Again, not to say that there aren't solutions out there that could actually translate into NOI. I'm curious myself if there's someone out there that could share some thoughts. If you actually have some case studies, because I've done something not too long ago. I put out a post and I said, if you have great technology that solves pain points, please reach out to me. I would love to do a podcast to just show your technology, to showcase it, and then actually challenge your technology. See if it breaks, see if it does what you say it's doing, and then show us how it saves the operators money. I'm actually still very interested, and the offer my offer is still open, right? Consider it out there. If you have great technology and you would like to do a show about your technology and what it solves and how it turns into NOI for the operators, my door is open. I see another comment, two comments from G right here. reactive is 5 to 10x more expensive than planned. Uh, I I don't have knowledge of those numbers, but it sounds about right. Uh, just think about the small drip that you could find during your preventive maintenance, right? So I'm going back to maintenance because that's where I could easily find answers. And just imagine that you had a faucet or a tub or a toilet that had a small drip, behind the tank. And during your preventive maintenance inspection, you found that you fixed it. Well, because you're not doing preventive maintenance, that drip turns into a stream or into a pipe bust. Imagine having that on a mid-rise on a high-rise building that has 5, 7, 10 stories, right? A single toilet could cause over $1 million worth of damage. Seriously, it could do that. So I think, I think probably a single catastrophic event like that being prevented will pay for your preventive maintenance program and then some. Um, what is tough is compliance, ADD, more work, reactive, admin to the site team, unless is it rethought. That's a great thought out there. And there's some questions uh, down the road here in a survey. We will be getting to them as well, where there's some compliance stuff and there's some regulation related questions that are being asked. I'm very curious to see how you react. What do you think of those? uh, Daily distractions and reactive operations. Daily distractions, you could ask a maintenance person, do you have daily distractions? He'll tell you, right, he'll tell you immediately, I just had to turn my cell phone off, not answer phone calls or text messages, because I'm being distracted every other minute. I can't get any work done. I think they're still out there, and not because someone necessarily means um, to make it harder for the maintenance teams out there. It's just not enough of them, and there's too much work. So out of desperation, uh, they being called all the time. Best practices. Okay, best practices being followed 100% of the time. I found this part of the survey fascinating with the best practices, right? So you're gonna see here on the top uh, the light blue saying that uh, we're completely confident that best practices are followed 100% of the time. This is a very strong statement, right? Best practices are followed 100% of the time. So if we're talking about, let's just take marketing vacancies, right? Let's just take any category. It doesn't have to be marketing. Look, we have so many categories here, and I'm seeing that most of the folks here, uh, the one that rates the lowest is like overall company performance, right? And it still rates at 40%. So it means that 4 out of 10 people are confident that best practices are followed 100% of the time. Uh, I'm going to I'm going to say that probably perception here is different than reality. I think they're overshooting when they're estimating that best practices are followed 100% of the time. Because honestly, we're all humans, right? And then with so much turnover, I think I'll take the 40% right here, which is the lowest one. If I was with a company, and for sure best practices are followed 40% of the time with the levels of turnovers that we have, I think that would be a great way to build a great foundation on, right? And some areas right here we have like 58% at move-ins. Well, I think it's enough to like pull some random apartmentratings.com, various websites from various properties, like completely random, and then look at their reviews and the moving experience, or maybe bring someone from Satisfax or other companies, or Sweet Bunny, other companies, or Gracehill that administrate surveys, and see if this number, like if the numbers from uh, residents' feedback match this confidence. 58% confident that we are following best practices uh, regarding moving. Very interesting numbers. Definitely a lot to talk about here. I will say that I'm doubtful that they reflect the reality, but I think again it's kind of like human nature. People will people will overshoot. They will. I think they have this desire to say we're doing a great job, and there's nothing wrong with that. But that reflects into the numbers, and I think that we all know that there's a lot of pain out there that probably uh, the numbers will be like skewed if you were to ask like the residents or the prospects when it comes to movings, for example. uh, Cameron has a comment here, and a question for Chris. If it's the right tech, it should be fewer truck rolls by vendors, lower utility spend, and lower turnover. Uh, Cameron, I don't disagree out there with you. I will also say that it remains to be proved. And I welcome you. I really welcome you. If you have some case studies, some examples, I'd love to do a show about those case studies. Just just talk the stuff through, right? Show some real numbers with enough data points where we could make a case of how this impacts in a positive way. What's the type of the type of tech that impacts in a positive way. uh, Another comment here from G. How is that possible if there are 10 trainers and few SOPs, much less a single SOP per operator? Um, that's a great question. I'm trying to make sure that I'm understanding your questions, Kirchi. How is that possible if there are 10 trainers and few SOPs? Uh, so I will say this. I think it varies. I don't necessarily think that this could be applying to all size assets when it comes to a few SOPs. I think, for example, a larger company, right? They don't have few SOPs because they're not necessarily created from scratch. They're actually just buying a SOP manual, and all they do is really to review and make sure that they're in line with the business philosophy of the company. So they don't build them from scratch. Uh, so I don't think that that's always the case. But anyway, I welcome if you have any, like if you have a different opinion right there, I welcome it. That was related to the best practice point. Okay. Uh, yes. Thank you for thank you for that point out there for clarifying. Collaboration is the most common driver of complete confidence, with responses ranging from 39 to 45%. Okay. So without before getting into the numbers here, right? Let's just talk about collaboration. There's some amazing teams out there doing a great job, right? Perfect collaboration between the office staff and the maintenance staff. But I'm just thinking overall industry turnover rates, right? How could you build some meaningful collaboration between the two teams when you have this constant uh, uh, revolving door, right? People coming and leaving all the time. That's my only thought here, right? What is the main factor that makes you completely confident best practices are being followed all the time? Okay, so collaboration rates the highest. Strong team collaboration, clear SOPs, smaller percentages. Technology, AI, it's it's making a timid entry out there, a very small percentage. Reporting tools. Well, with reporting tools, yeah, I see numbers from like small to like mediums based on the size of the asset. I'll say with the reporting tools is like this. It's that old saying, crap in, crap out. If you have great information being put into the system, you're gonna get great reporting. But if the information that you put in is tainted, it's not a reliable information, then what's gonna come out is not gonna be great information. Cameron, we are far from the only tech with case studies, but the numbers are there. Paratigo case studies. I would love to, Cameron. I would love to take a look at the report of the case studies, and maybe we do a conversation on your case studies. Again, I'm totally open to do that and make the case for NOI. What is the main factor that makes you completely confident best practices are being followed 100% of the time? Again, it's kind of the same question that we started on this chapter. Strong team collaboration, 42%. That is a very, very high percentage out of all. I'll be really curious if there were some follow-up questions, being asked. Why like this confident, almost like half? Well, 4 out of 10, right? 42% are saying that a strong team collaboration leads to that. But does that strong team collaboration exist, or are they just talking about in general? If we were to have strong team collaboration, that will lead into that will have this result of being confident that best practices are followed 100% of the time. Visibility and access metrics. Do you have real-time visibility into key KPIs that matter most for your business? Yes, 50% are saying yes. I think that's great. 50%, it's a great number, like a strong yes. Also followed by 40% yes, partial or limited visibility. Partial means, maybe for the most time, I don't know if it's on the lower end or on the higher end, but between the first and the second result, there's like 90% are stating that they have some sort of a visibility, which is great. So only 10% don't currently have any visibility. How easy or difficult is it for you to access each of the following types of KPIs? Historical data. Okay, historical data. 77% are saying that it's easy. Current data, 92%. That's incredibly good. Now, when it comes to predictive data, only 44%, so the number drops significantly. And prescriptive data, it's in a 40s to 47%. I think with the advent of AI and more AI technology being part of this part of the ecosystem, we will see more prescriptive data be made available. What do you all think? Financial outcomes. This is a fun one. Which best describes your company's performance trajectory right now? 17% are saying we're at the top of our game, winning consistently. We're in a ballpark, hitting a few home runs, but some hits and misses. So I think if we were to just judge by these numbers, the first and second accumulated together is like 88%, either top of their game or they're in a ballpark. So they're cruising right along. That's a lot better than what I'm hearing from individuals, really. I'm just hearing lower, way lower, I guess, levels of being confident that those performance metrics are being met. So I'm really curious about this one here. If I was to talk to some individuals, do you believe your company consistently delivers strong financial returns for your investors and owners? A staggering 86% are saying yes. So I was wondering what the number would be if we were to ask the investors and owners, right? Would that number be as high? Not sure. That doesn't mean that the answer is no. Have resident satisfaction scores improved in the past 12 months based on your survey data? Okay. Um, 85% are saying yes. So on one hand, we have this significant issue with labor shortage, right? Uh, double by turnover, employee turnover rates, and then the satisfaction scores have improved in the past 12 months. So I think these numbers are contradictory, right? They're not telling the same story. I'll be very very curious to maybe just I'm not even sure how to address this, right? Because to me they're contradicting. They're telling two like opposite stories. If your satisfaction scores have improved, how did you do that? For 85% of the uh, I guess the people who are interviewed, while you have all these struggles with efficiencies, with being short staff. uh, something is not something's not computing to me out there. Does your company survey staff on the day to day work experience and level of satisfaction? uh, Only 1 out of 3, only 35% are surveying. I think this is an incredible opportunity here to interview uh, your employees on a regular basis and find a way to where they will actually tell you the truth, how they really feel, versus being afraid that however they respond, somehow corporate is going to see the responses and possibly will retaliate. Uh, and also, I'm seeing that staff satisfaction scores improved over the past 12 months. So 87% are stating that uh, their staff satisfaction scores have improved, but we're still looking at increasingly uh, increasing higher turnover rates, employee turnover rates. I'm really curious how many of the folks that responded to this particular question have management positions versus non-management position. Because I think that there's an obvious bias out there, and like it's a human bias, right? We want to believe that we're doing a great job, and maybe at times it's just a feeling situation. Is not something based on uh, hard cold facts. When we're saying, because this is incredibly high number that again contradicts kind of like the turnover rates, employee turnover rates, and everything that we're experiencing as an industry. Staff satisfaction factors, if improvements versus declines. Let's see what questions we have here. Super curious. Super curious. Well, I guess we're not having any particular questions in this section here. I was curious to see some I was curious to see some numbers, maybe down the road. Business performance challenges, error frequency and types. How often does your organization identify errors that negatively affect overall business performance or profitability? 17% are saying daily. Uh, and 31% are saying weekly on a weekly basis. So based on these two numbers, 17 and 31, 48%, right? Almost half of it are saying that the organization is identifying errors that negatively affect overall business performance or profitability. To me, if it's 50%, that's a great start, right? I mean, it's not optimal. It'll be better if it's 70 or 80%. But if they do that on a daily and weekly basis, half of them, I think that's pretty good. I'm also concerned that 1 out of five are saying that they identify this quarterly, like 19%. And if we add the less the quarterly and never, like it's 28%. That's almost 1 out of 3 respondents saying that they rarely or never respond to this. So that's super concerning. On the other side, I see this as an opportunity to improve, right? An incredible opportunity for companies to look into that metric. Cameron, 87 of only 35 that survey the staff response bias if they're uh, measuring it they care about. I'll be worried about the other 65%. Hello, Robert. Good to have you here. Error types. Which of the following errors more often contribute to performance issues in your organization? Human error, 31%. Human error, customer actions, 25%. Process not followed. When we're talking about process not followed, right here, it's still, to me, it still falls under human error, right? Because who doesn't follow process? It's gonna be your employees, right? Technology error, 12%. So uh, that percentage is, I think, smaller than what I'm hearing as a general like conversation that technology that doesn't work, or like it's clunky, it doesn't do the job. Um, Technology error, hardware failures. So technology 12 plus 6 is like 18%, almost 1 out of 5. Um, it's not too bad of a number. A lot of technology is being tested as we speak. So I think with the right technology, things will improve in the future. Now, I want to look at the first three, right? Human error, they're all basically human errors, right? So let's do some math here. So you're looking at 79, almost 80% here is related to human error. Imagine if you had some technology to help, right? Imagine if you have some technology to help, the right type of technology to they could reduce that number from like 80% to 60 or to 40%, basically cutting that in half. Imagine how much you would improve operational efficiency and also employee retention, resident retention, everything. So to me, that's a huge, like right there, that's a huge, huge, huge opportunity for technology to make an incredible difference. Uh, we're going here into some details. Okay. This breaks down the human error, manual data entry mistakes, miscommunication, poor decision making. Um, this is very detailed. Technology errors. Okay. Faulty property infrastructure. So basically, the property, I'm understanding, right? The property is not prepared for that technology to be deployed. Uh, tech equipment failures, software failures, fragmented or incompatible tools. Business performance challenges, disparate software and data tools. How many different software tools or logins does your business use on a typically day to manage work? This is a very, very interesting one, right? So, unique login, 15%, only 1 out of 6. Two logins, 25, a quarter. Three, 27. Four, it's at 14. Five logins, 5%, and then six and more. So if we were to say, let's just say 1 to 3, it's 2, 4, 50, 67, 67. So 1 out of 3 is like right here, 4 4 logins or more. So 1 out of 3 companies have like so many logins. Employees have so many logins to deal with. I think that right here there's a good opportunity to improve, um, and give your employees less logins. Consolidation, yeah. How would consolidating software logins impact your business and company overall performance? 60% positive impact, 37 no impact, 3% negative. I wonder why is on this 3%. Why is this 3%? Because to me, that should help, right? Maybe it's just probably not properly done. Integration is not properly done. Uh, how many distinct software solutions are you using to achieve visibility in your company key performance? One solution. I'm assuming the big PMSs here. Two solutions, 29%. Three solutions, 29. Four and five solutions, 12%. This is very fragmented. So about a quarter of the operators that responded here are using four or more solutions. I think that's a really good opportunity right there to consolidate for those. Would consolidating the data into one system improve your company's overall performance? 2 out of 3, yes. The other 33% are saying no. I'm curious, like, what was the rationale right there saying that consolidation of data will not improve your company's performance? Why would you not want to have that consolidated if it's done the right way? So maybe there's some concern that it's not done the right way, right? Which, if any, of the following types of AI tools does your company use the most? Okay, this is very interesting. General purpose AI tools, more than 50%, 53%, right? Um, it says, does your company currently use? I wonder, like, out of the 53% here, if they're actually tools that are provided by the company, by the employer, or they're actually a combination between what the employer provides and what the employees are bringing, like on their phones. Like, I have a chat GPT account, right, and I'm using it for work type of deal. I'm really curious. AI features built into your property management software, 43%. That's good. That's high. AI features built into other business software, 26%. Into other management business software. Uh, this is interesting. AI vibe coding tools, 2%. I'm really curious who these 2% of the respondents are, because I love to hear how their companies are using vibe coding. I think it's such a cool way to use, AI and technology. I'm curious who they are. And now the last response, none of the above. I don't use any AI tools in my role. Okay, this is this is the 24%. This is 1 out of 4. I'm going to have to say this, right? If your company is not using any AI tools for your role, you should be concerned about your role in the future, and about your role in property management. Because if you're not exposed, you're not working with uh, artificial intelligence, you don't understand, like, the basic usage at least. I think that you're gonna be exposed to a lot of possible, you'll be one of the first people to be laid off, or like to be overlooked when it comes to a promotion, or a new career opportunity. So I'll be super concerned if you're part of this 24%. I'll be super concerned for you for the near future. How would you describe the impact of AI tools on your company's performance? 1 out of 5, 21%, revolutionary, driving a leap in performance. That's great. Moderately helpful. I think right here the 60%. There's a good part of the 60% that they could move up, becoming revolutionary. I think it's probably just the technology that's not yet like super mature. Is not really kicking at all cylinders, but I know the technology develops very fast or is being replaced with other technology that it's gonna take over uh, a better solution. Lucian, hello from Romania. Nice to have you here. It does not have an effect of performance yet, 16%, and then it's overhyped. So when we add the 16 and 3%, so almost 1 out of 5 is not really funded on what's available for technology, for AI tools. I'm sorry, specifically. Have AI tools improved your company overall performance? 77% yes. This is just the beginning, folks. I think that this percentage will probably go up a little bit, and then we will see like some incredible breakthroughs when it comes to technology and especially AI in a very near future. Uh, Barriers, if resolved, which barriers will improve your company performance? Uh, Human error. When we're looking at the 33%, that's like 1 out of 3. 1 out of 3 responders that are mentioning human error. Technology could actually be like a great catalyst to like bring that number down. With a proper technology, I think that number could be reduced to a very small number. Processes not followed. Right here, I see another opportunity. Can we automate some of those processes so we don't leave them manually? For example, the onboarding process, like who does what, who has ownership, who orders the uniforms for the new employee, who gives them the new logins, who gives them access to, I don't know, to keys, to the key box, who gives them access to the computer, everything, who gives them the login for like the training, the LMS. There's so many things that are needed for a new employee. If you have that process automated, I think it's gonna drive great results. Fragmented technology, too many overlapping systems, 13%. I have some thoughts here too. Although 13% is not a huge number, I will just say this, that there's there's AI now. There are AI products that are being built as we speak that are going to solve this problem. They're going to audit your uh, uh, current technology and will actually determine where's the overlap, what is the technology that's not that useful, that you don't actually need, and just you could altogether eliminate or replace with a better one. So right there, there's a great opportunity. Data silos, too many isolated data sources. I think that technology that does the audits could actually connect the dots as well, could become like a fabric that connects all those data silos and brings them all together and makes them talk to each other. Significant number of responses highlight limited time, overwhelming workloads, and competing priorities are major barriers, of course. Many mention not having enough hours in a day, frequent urgent tasks. Yeah, a lot of reactiveness. We just went over that earlier on. And challenge of balancing daily operations with strategic goals. Of course, when you're always putting out fires, then you don't really have a lot of time to strategically think. Staffing shortages, we went over that too. Insufficient personnel, lack of qualified staff, frequently said. Yeah. Um, I say it's ironic, or maybe not that ironic, but on top of this challenge of not having enough qualified employees, I'm seeing a lot of learning and development professionals being laid off and having hard time finding a job. So if you're gonna lay off your people that's supposed to do training and education and development to your employees, that's not going to get any better anytime soon. As a good friend of mine, Mark Hooker, would say, teams that don't train don't win. And he's absolutely right on the money. Inefficient processes and system fragmentation, daily distraction and reactive operations. Oh, yeah, big time. Analysis by property type. I think I want to skip this area. I'm going to challenges. Okay. Operational efficiencies in single family, 77%, 75 in multifamily. So operational efficiencies is leading in all categories by a lot. The performance ecosystem, affordable housing. Yeah, operational efficiencies right here, 73%. Commercial 73, student housing 77, senior 72, all in the 70s, mixed use. Frequency of errors. Technology stack. When asked about the number of tools used daily, most property types cluster around 2 to 3 logins. Community associations reported the heaviest spread, 34%, indicating juggling 3 different tools daily. Senior housing, on the other hand, showed the highest rate of 6 or more logins, 25%, goodness gracious, reflecting the complex requirements for managing both housing operations and care services. Student housing stood out again. 20% of responders reported relying on more than 5 distinct systems, a higher rate than any other group except senior housing. So, a lot of opportunity out there. Multifamily and single family operators demonstrated greater efficiencies, with a majority relying on 2 or 3 platforms. Unified data solutions and performance. Senior housing. The property management industry is undergoing a critical evolution marked by a necessary shift for managing tasks to optimizing performance. The path to real performance, bridging the efficiency data gaps, external pressures, reclaiming strategic time. Okay. Performance is deeply intertwined with people and processes, of course, it always is. Investing in team satisfaction. Only 35% of companies actively survey staff satisfaction. Yeah, that's an incredible opportunity out there for 2 out of 3 operators. A missed opportunity, of course, a big missed opportunity. How would you know to improve their employee satisfaction levels if you don't measure it? You can measure it, you can improve it. The need for unified data, big fragmentation cost. Nearly 60% of property professionals might use 3 or more separate software logins daily, leading to fractured data and inefficient workflows. Absolutely correct. I actually have a friend of mine that's a technology developer, and he said that they experience employees at the site level saying that they're calling in tickets saying that my login is not working, and then when they ask to actually pull up the website where they're logging in, they're using the website for a different company. So employees at the site level have so many websites, so many tech solutions to be dealing with, that they're basically confusing right now which login is for which technical solution. I can say I'm surprised. Uh, Benefits of consolidation: 67 of operators believe consolidating all data into a single system will improve their company's overall performance. Among those who have successfully achieved this consolidation, 67 reported a strong positive improvement in performance. A single cohesive data foundation is no longer a luxury, but a competitive advantage. What's up, Mr. Souza? These data points are wild. Yes, they are, sir. I totally agree right here with you. I'm not sure how long you were able to be on the call with us today. Burnout is inevitable. Yes, it is. Yes, it is. It's just way too much. It's just way too much workload and unrealistic expectations on a site level stuff. And seems like a lot has been dumped on them without the proper without the proper training, without the proper feedback, without just adding more. Even technology adding more doesn't mean just makes things better. I used to say this, and I'm still saying it. We tend to punish people with technology. It's literally what we do by pushing so much technology. Used to work for a very large operator. When I opened the environment for apps for technology, where I could pick the technology that I wanted to use, I felt like I was in an Apple shop, like dozens and dozens of apps. In a way, it's good because you have everything at your fingertips when you need it, but too many choices are overall, I think, detrimental. They're not actually helping when you have. And at times it's not a matter of choices, right? Maybe you have 15 or 20 or 30 or 50 pieces of software that are actually mandatory to use for you as an employee. It really becomes a punishment at that point. True performance management requires a technology framework that can move beyond reporting on what happened to guiding what to do next for the best possible outcome. Yeah, to predict. AI is gonna do that. As I think AI is gonna do that. The proper AI tools are going to do that in the future. I want to thank our friends from NAA from for all the work that they put in. This is great research out here. It's a lot, right? It's a lot of work that went into. And special thanks to George, the VP of research out there. Uh, the NAA envisions a world where rental housing is a value partner in every community. NAA is the leading voice for the rental housing industry as a trusted partner, valued connector, and powerful advocate. We are committed to serving 140 state, local, and global affiliates, over 94,000 members, and more than 13 million apartment homes globally. We lead the way home. Again, thank you for the great work that you guys put in out there, the entire team. If you have similar case studies, reports, everything that there is of real interest for the industry, I encourage you to reach out to me directly, and let's do a show about that. I hope I hope you all found this information valuable. Thank you all that uh, spent the time today. We went way over an hour. We're about an hour and 20 minutes. We're approaching right now. I appreciate you. I hope you have a great afternoon. And I will be back soon with another show. Take care. Have a great afternoon.